Good morning and welcome to AE Talks in partnership with FI Group. My name is Peter and I'm part of the advanced engineering team. Today we're hearing from Amber Farrington, R&D Tax Consultant, and Mark Denscombe, Key Account Manager, both from FI Group. They'll be taking us through the R&D Tax Relief Landscape, including the qualifying R&D tax activities that are often overlooked, the importance R&D tax relief plays in ongoing mitigation, and what impact the latest legislation might have on your future claim. I'm sure there'll be lots of engagement throughout, so before we get started, I'd like to quickly take you through some of the housekeeping rules. On the right-hand side of your screen, you'll see a chat function, a questions function, and a polls function. Please say hello, add comments, share tips and opinions in the chat function. The more engagement, the better it is for everyone, really. It does make a slightly annoying pinging sound, so I'd suggest that you mute this by clicking on the audio button at the top of your screen. If you're having trouble finding it, it looks like a little bell. For any questions, please ask these in the questions tab rather than the chat tab. It'll make it much easier for us to see them and therefore to provide you with the answers that you need. Note that questions can also be voted up the list so that we avoid running over the same questions more than once. Amber and Mark will look to answer your questions following their presentation. We have some polls which will be asked throughout, so look out for these on the polls tab and make sure you answer them there. Amber and Mark's contact details will be posted in the chat, so if we don't manage to answer all of your questions today, you will be able to contact them directly after the event. So, without further ado, I'll now hand over to Amber and Mark, and I'll see you at the end for questions and answers.
Thank you, Peter. Good morning and a warm welcome to all the attendees of Advanced Engineering who've joined us today. My name is Mark Denscombe, Key Account Manager with FI Group UK, and I'm joined by my colleague Amber Farrington, who's an R&D tax consultant at FI Group, and she's worked across many different tax regimes, including, of course, the UK, the USA, Canada, Ireland, and Singapore. So, as the name of today's presentation would suggest, we'll be discussing the R&D tax landscape in the UK. Our aim is to provide a clear path forwards for companies who could stand to benefit from some of the incentives on offer. And while the activities of our clients and the report writing process we undertake are far from simple, we will try to keep things accessible today for those who are new to the concept of being rewarded through HMRC, yet still relevant for those who may be more familiar with the process itself. So we'll be covering a few topics today in relatively short order, including a deep dive into the principles that define R&D tax relief, a comprehensive case study, and how the claim process works. And as Peter mentioned, we'll move on to a short Q&A session at the end. And just to make you aware that the series of poll questions that will turn up at regular intervals throughout the presentation are designed to be a bit of fun, and your responses there are greatly appreciated. So without further ado, I'll hand you over to Amber, who will start us off with an overview of R&D tax relief. Amber?
That's great. Thanks, Mark. And thank you, Peter, for that earlier introduction. So good morning, everyone. As Mark said, I will start us off by giving a basic background to R&D tax, including what R&D tax relief is and what R&D means to HMRC, how to qualify for the incentive, more specifically, how to identify qualifying R&D activities and expenditure, and lastly, how to calculate the benefit. So the R&D tax regime is a government incentive that will either reduce your company's tax bill or offer a cash credit. There are two types of R&D tax relief depending on the size of your company. So there is the SME R&D relief scheme. So this is for companies typically with fewer than 500 employees, and then the RDEX scheme for large companies. The main difference between the two schemes is how the benefit is calculated, which I'll cover in a bit more detail in a few minutes. Under both schemes, in order for the company to claim the R&D tax relief, they must have qualifying R&D activities and qualifying R&D expenses. So let's get into a little bit more detail about that. So this is the definition of R&D according to HMRC, which says that R&D takes place when a project seeks to achieve an advance in science or technology through the resolution of scientific or technological uncertainty. So any work done in trying to resolve these uncertainties could be qualifying R&D activities. So let's cover in a little bit more detail what we mean by achieving advancements and overcoming uncertainties. So the first part of the definition of R&D according to HMRC states that a project must seek to achieve an advance in a field of science or technology. So this could be through the development of a new product or process, or by making appreciable improvements to an existing product or process. Typically, advancements are made by improving the functionality, performance, speed, reliability, etc. of a technology. Examples of technological advancements include using new materials to replace components in aircraft wing designs with the objective of reducing weight and improving structural performance. Or you could be developing a new electric motor in order to improve the autonomy of hybrid electric vehicles. Or it could be the development of software to automate bench testing with the objective of improving test accuracy and reducing testing time and costs. So the second part of the definition of R&D states that in attempting to achieve the technological advance, there must have been technological uncertainty that needed to be overcome. In other words, you know what your objective or goal is, but the best way to reach this goal is unknown. So there was uncertainty about the solution, the method, or the design. There was potential for failure, and it was not straightforward for a competent professional in the field to achieve. It's important to note here that uncertainty must involve challenges that are technological in nature and not business challenges such as, the project took a long time to complete. Examples of technological uncertainties include, how to predict failure of essential components when undergoing complex stress cycles. It could be uncertainty related to mitigating different operational risks when integrating new components in an engine, or it could be uncertainty related to developing new coding that are capable of flagging errors during a testing procedure. So now that we've covered the requirements for qualifying R&D activities, we must identify that the company has qualifying R&D expenditure. Qualifying R&D expenditure are the operating expenses of a company that form the basis of the R&D benefit. So there are four main categories of qualifying costs, which are staffing costs. So these are costs, related to staff on payroll or temporary workers that you might have working under your direction and control. Consumable items, so this includes raw materials, utilities, lab or testing costs. Subcontracted activities, so work contracted out to outside organizations, and then software licenses that were required as part of the R&D. So as I mentioned earlier, there are two types of R&D tax relief schemes depending on the size of your company. So there is the SME R&D relief scheme, where an enhanced deduction of 130% of your qualifying R&D expenditures are used to offset the company's yearly profit. Under this scheme, a company can receive up to 33% back of the total qualifying expenditure. The second scheme is the RDEX scheme for large companies. And under this scheme, a tax credit is calculated at 12% of total qualifying expenditure. And it's important to note here, I think that Mark may mention it later on, but the 12% rate has actually increased to 13% for any activities and costs captured after or as of April this year. Okay, so I know I went through that quite quickly, but of course we're pressed for time. So in summary, we learned that R&D tax relief is a government incentive that will either reduce your company's tax bill or offer a cash credit. In order to claim for R&D tax relief, you must have qualifying R&D activities and qualifying R&D expenditures. And finally, there are two tax relief schemes for UK companies. The first being the SME scheme, where an enhanced deduction is applied to profits, and companies can receive back up to 33% of their qualifying expenditure. And then there's the RDIC scheme for large companies, where a tax credit is calculated currently at 12% and at 13% as of April 2020.
Thank you, Amber, for outlining the guiding principles of R&D tax relief so eloquently. Before Amber leads us through a case study to illustrate instances of technological advancement and uncertainty that's been overcome, can I ask that our audience vote in the poll on the current question that's on the screen at the moment? I'll just run through that very quickly. So the first question here is, what is the first part of the definition of R&D to HMRC? Is it A, the project must seek to achieve an advance in a field of science or technology? B, the project must be successful in achieving an advance in a field of science or technology? Or C, the project must seek to turn apples into oranges? So if you can go to your polls and submit your votes. That's great. Okay, I think we'll need to move on this. So let's have a look and see. So it's the answer A, of course, is the correct answer there. And just taking a quick look at the polls there, it's perhaps no surprise that 100% of you got the right question. So a pat on the back for everyone there. So the next question quickly, which of the following is not a category of qualifying R&D expenditure? Is it A, software licenses, B, labor costs, or C, rents and rates? So once we've all submitted, we can have a quick look and see that rents and rates, and of course, 100% of you got that right. Back to you, Amber.
Perfect. Thank you, Mark. And for the individual who chose apples, turning apples into oranges, if you need, we can discuss this after the call if we need to review it again. But anyways, moving forward, so we thought it would be a good idea to bring everything we've just covered into a case study. So the business scenario is that we have a company, Aerospace Limited, and they are an engineering, consulting, and R&D service firm. Aerospace supports leading players in the aerospace sector with cutting-edge digital technologies. Aerospace was contracted by a leading aircraft manufacturer to design and develop aircraft passenger seats for a new state-of-the-art aircraft. In 2019, Aerospace Limited began an R&D project to design aircraft seats within the prescribed weight, space, and security constraints. Aerospace were working with the aircraft designer to deliver a final functional prototype of the new seats. So as we covered earlier, in order for a project to qualify as R&D, it must seek to achieve an advance in science or technology by resolving technological or scientific uncertainties. So in the case of Aerospace Limited, the company sought to achieve the following advance in technology, which was the development of a seat combining new materials in order to reduce the seat weight, tailor its stiffness to ensure optimal behavior in an extreme event. So this would be, in the event of turbulence or a crash, and as well as to improve safety and comfort. In trying to achieve the advance, the company faced uncertainties related to determining how the materials will interact in the long term in order to predict failure and maintenance levels required, and then uncertainties related to developing a solution with the correct weight to stiffness ratio in order to comply with the stringent aircraft regulations. So Aerospace Limited had qualifying expenditure in 3 cost categories during the 2019 period. So the company employed 30 full-time engineers to work on the project during the period, where they spent 80% of their time on the R&D project, trying to overcome uncertainties. So this was a total of £1.2 million during the period. Raw materials and utility costs for the project came to £1 million during the period, and then technical software costs of £300,000. So as Aerospace Limited falls under the category of a large company, they must claim under the RDEC scheme, where the tax credit is calculated at 12% of the total qualifying expenditure. So with a total qualifying R&D expenditure of £2.5 million, Aerospace will receive a tax credit equal to £300,000.
Thank you, Amber. That's great. Thank you. Just moving on very quickly to the polls. The question here is, which of the following is not a technological advance? Is it A, developing a seat combining aluminium and composite materials in order to reduce seat weight? B, developing a seat combining aluminium and composite materials in order to improve safety and comfort? Or C, developing a seat combining aluminium and composite materials in order to aesthetically improve the seat? That's great. Okay, so the correct answer is C, developing a seat combining aluminium and composite materials in order to aesthetically improve the seat. And looking at the polls, it would appear that 97% have got this right. So moving on, as a form of innovation funding, R&D tax credits can really transform your business. And we've seen it happen, especially right now during this unprecedented time. It's a way for innovative companies to continue to grow. And if a company is claiming for the first time, we can claim back up to 2 tax years. So in the recently published R&D tax credit statistics by HMRC, this was back in September this year, the average claim size was £53,000 for SMEs and over £600,000 for large companies going through the RDEC scheme. We continue to see funding made available to incentivize R&D increases, with a massive 22 billion announced this year, and the RDEC rate increasing from 12 to 13%, as Amber mentioned. So the competitive advantages gained through innovation and the foreign investment that it can attract, with the UK determined to retain its status as one of, if not the most innovative country in Europe. As the market matures, the benefits received back on R&D expenditure are increasingly seen as an essential part of a company's fiscal strategy and future mitigation costs. So in terms of the actual claim process, it's simple enough. That is, to professionals who deal with the claim process, but it can be quite daunting for companies who are attempting to interpret the legislation and make the claim themselves. Now, HMRC doesn't really give any clear guidelines here, which means there's a lot of grey areas that only come with experience and knowledge, especially when you're trying to optimize costs and maximize a claim and get the best benefit to you possible. So going through the process, the claim documents that are required are an R&D report, which consists of a comprehensive technological roadmap, which is how HMRC interpret your activities, and the CT600 tax computation form. In terms of the actual time frame required, the timeline tends to be from between 4 to 6 weeks in order to actually claim. This includes technical scoping, financial analysis, preparation of the claim report, and of course submission to HMRC. Once submitted to HMRC, the claim typically takes about 28 days to be processed. So the refund is issued immediately, so within 28 days, you will tend to receive the benefit back to the company. In the event that there are any inquiries from HMRC, of course, we would handle that side of things, but I hasten to add that we do have a 100% success rate.
Okay, so my turn to ask a question. All right, so similar to the previous poll questions, we have another here. So the question is, what is a strategy that can be classed as future mitigation? So is it planning R&D tax relief in advance as a form of innovation funding? Is apportioning a third of your R&D spend from another department's budget, or the panic strategy, of course? So please submit your answer under the polls tab. I'll just give it a few more seconds. All right, so we've had some votes come in, a couple under the panic answer. So thank you for the, the comic relief there. But of course, the answer is planning R&D tax relief in advance as a form of innovation spending or funding. Mark, oh, there's another one, sorry. So our next question is, what can you hope to achieve when claiming R&D tax relief? Is it a big shiny medal, future funding of growth and innovation, or a soaring profit margin? I'll just give a couple more seconds to answer. And of course, the answer is future funding for growth and innovation. So now I can hand it back to you, Mark.
Thank you, Amber. That's great. So we're at least 2/3 of the way through our presentation, and it seemed like a good time to give you all a bit of a background regarding FI Group and our presence within the R&D tax advisory space. So we're a big company, and there are some big figures. FI Group have over 20 years of experience within the R&D tax incentive space. So we've been around now for almost as long as the incentives themselves have existed. And as of now, we have 38 offices in 13 countries and across 3 continents. Last year, claims submitted by FI Group worldwide brought benefits to our clients in excess of 1.3 billion euros. And this figure doubles if we account for the successful grant applications made on behalf of our clients. Worldwide, we have over 1,200 employees, of which approximately 400 are technical consultants with PhDs. Our consultants bring a combination of both industry and agency experience to claims. So they've seen both sides of the claim process. We work with companies of all sizes, from SMEs through to multinational PLCs. We've advised governments on new R&D incentive schemes, and we've collaborated with the OECD, that's the Office of Economic Cooperation and Development, in the translation and edition of the Frascati Manual, which is an international reference textbook for policymakers in science and innovation. And that includes definitions on basic concepts, instructions for data collection, and classifications for compiling R&D stats. So moving to the UK, our team consists of, again, experienced consultants who work directly with competent professionals to identify eligible R&D activities, alongside working directly with your accountants to ensure we've captured all qualifying costs and maximize your R&D tax credit. We all have professional backgrounds in the various industries that we claim for to ensure that we understand and extract all of the relevant information needed in order to provide a strong, robust claim report. So FI Group, we work with you throughout the entire claim process, from scoping to submission, and we deal, as I mentioned earlier, with any HMRC inquiries after the fact. It is worth noting that during the recent periods of lockdown, our team have successfully completed a record number of claims, with the vast majority having been conducted almost entirely via remote video calls. We're also, just to note, members of the RDCC, which is the Research and Development Consultative Committee, and we can use our considerable operational intelligence to consult with HMRC on changes to legislation or indeed standards of best practice. Just moving on to a point which is obviously extremely topical and has been for some time now. The government's response to the pandemic, of course, was to introduce a raft of support measures, especially for small and medium-sized enterprises. So measures like the furlough scheme, coronavirus business interruption loans, bounce back loans were introduced to help businesses manage short-term cash flow adequately and access funding quickly. However, it shouldn't detract from the existing measures that were in place. After all, measures such as R&D tax relief are viewed as an investment in UK PLC, and they're intended to encourage innovation rather than simply throw a lifeline to a business. So the reality is that with second peak now and a lockdown enforced, measures such as the R&D tax relief scheme are probably more important than ever. So in this slide, I just wanted to touch briefly on the points that will help to prevent your future innovation funding being adversely affected by the aforementioned short-term measures in place by the government. It's a bit of a checklist, but if you have applied for the business interruption loan or the bounce back loan, for example, then it's very important to ensure that it is ring-fenced from your research and development tax relief that you'll receive. So in order to do this, it's probably worthwhile that you check carefully your T&Cs for the loan that you've taken on, that you clarify the purpose within your board minutes, ring-fence funds if you can, as best as possible, specifically mention the separation within your application for these loans, and finally, to leave an audit trail. It sounds obvious perhaps, but it will protect your research and development tax relief going forwards.
Fantastic. First of all, thank you very much to Amber and Mark for your presentation. It was incredibly insightful. I can see that there's lots of questions coming in now, so we'll get on with those in a second. Before we do that, I just need to mention that in the polls section, there is a feedback survey which will take a couple of seconds to complete. It is just one question after all, so it'd be appreciated if people could do that. So right now we'll move on with the questions. The first one I'm going to ask you is from Tom Locke, and he has asked, can you please expand on what qualifies as consumables? Would this include, for example, equipment purchased for the function of carrying out the R&D process?
Yes, I can take this one. So consumables refers to materials transformed or consumed during the R&D process. Therefore, equipment purchased are generally not eligible just because they could have a life afterwards. But for equipments filed as depreciated assets, these can be claimed for under the RDA incentive, which, Tom, if you'd like some more information on, we'd be happy to reach out and discuss this with you after the webinar.
Perfect, thank you. The next question from Oliver Newton, and you obviously brushed on the joy of the COVID situation at the moment, and there are a few different questions around this topic. But the first one, as said from Oliver, have you noticed COVID-19 having a detrimental impact on R&D investment?
I'll take this one if you don't mind. In terms of, because quite often when you're looking at the claim process in terms of the time cycle and how it impacts a business going forwards, quite often we're finding that companies are actually budgeting ahead in terms of future mitigation. So they're actually benefiting from activities that have occurred in the previous tax year. which is feeding into their current R&D spend. So certainly for companies who are approaching, for example, their year-end month being December, it's vitally important that they're able to avail of the incentives that are available to them at this stage, because it certainly will feed into their ability to continue to invest into R&D going forwards. I think if there is any impact, it's almost certain to be seen in the following year. But if people are managing their R&D tax relief claims properly, then certainly that will help in large part to mitigate this.
Brilliant, thank you. The next question from Ian Scott. Please, can you clarify software licenses that can be claimed? For example, is it only technical licenses, e.g. CAD, or can project management, such as MS Office Project, be claimed?
Yeah, so I'll take this one, Mark. So any software licenses that were purchased for the purpose of the R&D project can be claimed. And this would include project management software apportioned to the amount, I guess, to the relevance of the R&D project. So maybe you wouldn't be able to claim for the entire cost related to project management software, but we could certainly apportion parts of the costs that relate to it. And then, of course, we can include costs relating to more technical software packages such as CAD. And I guess just to kind of add on to that, if the software was brought in purely for the R&D, so for example, software that needed to be purchased to enable new hardware integrations to work, then certainly we can include these kind of costs.
Thank you. The next one we have is from Peter Doyle, and quite simply he says, how about R&D tax credits with regard to a services firm rather than products?
Yeah, I'll take this one as well, Mark, if that's okay. So if in providing the services, the company had to resolve technological or scientific uncertainties, it's certainly worth exploring, as the company might be able to make a claim. It doesn't matter if you're developing a new product, a new process, a new service, or developing kind of new knowledge within the field itself. You certainly might be able to make a claim. Of course, due diligence will have to be carried out to ensure who's controlling the project and to make sure that it fits within the requirements of the R&D scheme. But like I said, certainly something that's worth exploring, because we do have experience, a vast experience in claiming for service providers.
Brilliant. And there's a second question from Peter, which you again sort of touched upon. So is it true that UK firms have started and done more innovation due to COVID-19 in the last 3 months than over the last 3 years?
I couldn't verify if that's true or not, but certainly there would appear to be a huge amount of claims going through, which would indicate that there is a vast amount of activity within the sector. And that some of the announcements made earlier this year with regard to the injection of 22 billion in respect of research and development is having the desired effect, and that actually, if there is a way forwards, and there is always a way forwards, that we innovate our way out of this current situation.
Thank you. The next one from Ross Cowan. If I end up doing R&D as part of delivering a piece of work for one of my customers, is that claimable?
Yes, so certainly. I mean, if the company is facing risk and in trying to overcome technological uncertainties, then certainly they'd be able to make a claim. Like I had mentioned kind of in a previous answer, we would have to do a due diligence just to make sure that the project control and direction is within your company and not the company that you're providing the service for, meaning that there was a financial risk in the work that you had to undertake. Then yes, you can be eligible. And we see this all the time, with, for example, with the case study I used earlier, with aerospace. They were contracted by a major aircraft manufacturer to carry out R&D related to, the overall R&D project of creating a new state-of-the-art aircraft. So to answer your question in short, yes.
Some good news from there. Next question from Scott Dickinson. What level of detail is required when submitting qualifying expenses? For example, timesheets per employee, referencing back to purchase ledgers, etc.
Right. So we work with companies of all sizes. So, sometimes we're working on projects with, where there are only 5 software developers working on it. So there aren't any, specific timesheets to, a long list of projects. So, and HMRC understands that. So timesheets are always really useful, but they're not a requirement. We hold detailed technical interviews with the competent professionals in discussing the R&D project, so we're able to determine with them kind of how much time was spent on R&D, and then how we can claim, I guess, staff costs in relation to that. So this isn't the case, of course, if there aren't timesheets to work from. As for the other expenditures, kind of, the consumable items and the software licenses, we can work with you and alongside your accountant to kind of go through your transactions for the period to pull out and see what's eligible. As far as the report to HMRC and what you need to provide to them in showing these, how you came to qualify the expenditure, we typically, provide them with a summary, but the thing is that we just had to make sure that we have records of all of the costs that we're claiming for.
Brilliant, thank you. Next, Tim Mobley. Can you repeat the example or conditions for a software development company? UKRI indicated that software definitions for R&D were much more stringent. That was for innovation funding, not tax credits, however.
Yes, so regarding software development projects, this has been a hot topic in previous years, just because, or over the past few years, just because of the increased, I guess, investment in software development projects and in the information sector. So whereas in the past the guidelines have been quite stringent, there have been a lot of discussions in expanding the scope of qualifying activities and expenditure, particularly in the field of software development. But it all kind of comes back to, trying to achieve an advance, a scientific or technological advance, through the resolution of scientific or technological uncertainty. So if we can meet these requirements of the scheme, then certainly, the software project or not, you could be able to claim for R&D tax relief.
Thank you. And the next question from Angela. What is ring fencing exactly? I think it's just a bit of clarity required there.
Okay, so I think if you're ring fencing funds, just going back to the point with the bounce back and the business interruption loan schemes, then essentially you could hold, for example, those funds in a separate account, so a form of escrow, if you like, account where there's no sort of mixing of the waters. And by doing this, you're ensuring that there's no potential for the use of those funds to be misconstrued.
Thank you. So there's last 4 questions we'll go into now. The first one is from John, and he has asked, how do you deal with R&D projects that span multiple years?
Yes, so we see this a lot. We understand that, achieving your objective may not take 6 months. It might actually take 6 years. So basically what we do every year is we benchmark what's kind of happened in the project, and we just review all of the updated activities within the project for the period that we're claiming for. So if your project takes 6 years to complete, that's okay. As long as it meets the definition of R&D to HMRC, they understand that innovation can take a while. So claiming the same project over several periods is fine. We just have to substantiate the activities to HMRC.
Thank you. I think this one has been touched on already, but as you're the experts, I'll put it forward just in case. Jackie Fisher asks, are weekly product meetings and minutes enough evidence as opposed to board meetings?
Sorry, Amber. Yes, I would say that as long as there is clear documented evidence in minute form, then that should suffice.
A nice short one there, it's always useful. Next, Graham Kerridge. If you need to travel to project meetings, would travel and subsistence costs be allowable?
So as long as the travel was for the purposes of the R&D project, and this is the thing, the costs were reimbursed at the employee. So let's say the employee covered the costs and then it was reimbursed through payroll, we can capture those costs. But that is the way that they would have to be captured in order to do that.
Thank you. And the final question we have from Graham Sargent. When does a business change from an SME to a large business?
Okay, Graham, hi. So generally the classification between SME and a large business that would have to go through the RDEX scheme, for example, is based on a revenue of 100 million euros or over, or cash balance of 86 million euros. This is the sort of defining line. Also, employees of 500 or more is also an area that would take you from being a large SME into a very large company for an RDEC claim.
Brilliant. I think we've got time to sneak in one more quick question. So Jill Thornton asks, can I claim for support given on my R&D project from my accountant?
So I can answer this one, Mark. So there is a category of payroll costs or staff costs that is for indirect qualifying activities. So these are, support activities that are required as part of the R&D project. This is definitely an area where we have to do our due diligence to make sure that it's related to the project, because the time that we claim for has to be in trying to overcome technological uncertainties. So there are times when we claim some support activities through in-house accountants, but it might be something that we'd have to look into a little bit more, just because it depends. If it's invoiced to an accountant, probably not, but maybe if you have someone in-house that's dealing with invoices or something related to the R&D project, there might be something there that we can claim.
Brilliant. Thank you both. So there are a few questions which haven't been answered. However, as you can see, Mark and Amber's details are currently on the screen and in the chat, so feel free to email them directly. Before we sign off, I think Mark wants to say a quick word, and then he'll hand back to me for the last couple of seconds.
Thank you, Peter. That's great. Yeah, just really to say that thank you to Peter and to Advanced Engineering, and that on behalf of Amber, myself, and FI Group, we'd like to thank you all for joining us today. And we hope that you found the session helpful or interesting, or perhaps even both. And we look forward to an opportunity to speak with some of you regarding your past or future claims. And if you have any questions, we'd be happy to hear from you or swap emails. And as Peter's already mentioned, our details are there on the screen, so we look forward to speaking with some of you at some point soon.
Thank you, Mark. Thank you, Amber. Thank you to FI Group as well. Thank you also to everyone for attending today. There's been some great interaction and some fantastic questions. As you're probably aware, this will be on demand from slightly later on this afternoon, so feel free to send the link on to your colleagues. I'm sure there might be something of use in there to them. Also, our next session, keep an eye out on the Advanced Engineering website, will be on robustness of supply chains in this uncertain time. So thank you ever so much again for attending. Thank you to FI Group, and enjoy the afternoon.
Thank you.
Bye, everyone.